The market's been closed for about an hour and a half. It's Wednesday evening, December 23rd, and that means that it is time for the weekly swing trading video. Hello, traders. Before I get started tonight, let me first start off by wishing you all a Merry Christmas. May you and your family be blessed this holiday season. Tomorrow is a half day trading session. We can expect very light volume. In fact, today we had quite a few good day trading opportunities, which was nice. Even though the market should have been relatively quiet, there were some pockets of strength that we were able to take advantage of. You can see from the chart here that we've got very small bodied candles the last 2 days, close to a doji. That means that we're closing very close to where we opened. So there's not a lot of momentum. We could take a look at the 5-minute chart. Everything was nice this morning. We're kind of grinding higher, and then things started to soften up, and then we had a bit of a sell program into the close that took us pretty close to where we opened. Actually, we finished just about where we closed yesterday. Tomorrow is going to be a very lackluster day. There's not going to be a lot of trading going on. In fact, next week there'll be some position squaring going into year end. I'm not expecting a lot of movement higher. Last Sunday, we had news that Congress had passed a $900 billion stimulus bill. That should have been fantastic news. The market should have rallied like mad. It was already priced in. And you can see that was the opening Monday was actually much lower because there were concerns that there's a new coronavirus strain in England. So that weighed on the market, but buyers stepped in. We tested this upward sloping trend line, and I'm going to draw it for you right now. It was successfully tested, meaning that it held. And the trend line runs right about like that. You can see on Monday we fell below it, but then we were able to rally right back off of it. And that actually was the 20-day moving average as well. So I'm going to put up the 20-day moving average also for you. And there you can see how the market was able to close above the 20-day moving average the last 2 days. And Monday it was also able to close above it. As far as trading, Sunday night I released a video. I had mentioned an Adobe bullish put spread that we would try and enter. I got cold feet. The S&P 500 was down 60 points on the open Monday morning. Didn't want to stick my head in that news. I was hoping for a nice quiet market with a small dip, but not a 60-point S&P 500 fall. So I canceled the order, and I also left instructions with all of you. So we're going to take a look at our open positions, and this is what the staged order entry screen looked like Sunday night. And you can see if I go through the positions, Intel is marked in green. And we're going to take a look at that trade in detail once I go through the other positions. TME, we sold a naked put. That was a really nice return, I believe somewhere in the 15% range over the course of a week and a half. Great trade. NVIDIA, Etsy, Cisco, Hilton, those are all 25% winners, bullish put spreads that were on with 3 weeks or less till expiration. Great returns. KNDI, that was a naked put right that we did. We made about a 35% return on that naked put right. Clicking on all cylinders here. This is good. CRSR, we never got into. Adobe, we canceled that. We never got into that. So that leaves us with 3 open positions. And we'll take a look at Amazon. That expires a week from Friday. ZS and RKT. These two are toast. We don't even need to look at these. We're short the 160 puts. ZS would have to fall 25% tonight for this spread to be at the money. RKT, that one would have to fall about 15% overnight for that to be at the money. These are going to expire worthless, so I could just as soon add 2 more green lines to the mix, leaving us with 1 open position, and that is Amazon. I think Amazon's going to do great into the holiday season. They're doing gangbuster business right now. We're safely out of the money on it. I like being in cash right now. So I'm going to go to the S&P 500, and I'm going to tell you why. This is not a very strong rally in here. You can see that there are a mix of green and red candles. when we do see a red candle, they tend to be pretty big, pretty severe. Option implied volatilities have dropped dramatically. I'm going to put up the VXX, which is a measure of option implied volatilities. It's also called the fear index. This shows you that there is very little fear in the marketplace. Complacency. If you're ever going to get a nice correction, it's going to happen when fear is very, very low and nobody is looking for a surprise event. If you don't believe me, take a look at option implied volatilities last January and February before the coronavirus news hit. Very, very low. And as soon as the market started to roll over, option premiums exploded. Now, does this mean that we are going to roll over and the market's going to sell off hard in January? No, it doesn't mean that, but it means that we should be cautious. I've also mentioned to you that we are riding the upper end of a Bollinger Band on the SPY. Does that mean that the market's going to roll over and sell off? No, it means that we should be cautious. What do I see that could possibly cause a problem? Well, first of all, the stimulus bill has been factored into the market. Everybody has been expecting a stimulus bill. $900 billion is a lot of money, substantially less than they were talking about before the election, but it was priced into the market. That's why the market really didn't have much of a reaction to it. Coronavirus is still spreading like mad. Every expert that I've listened to has said that yes, it's nice that the vaccines will be made available. Yes, it's important that people get vaccinated, but we should not expect any huge drop in the number of new cases, probably for a quarter, because it's going to take a long time for people to get vaccinated, and we don't know what that level of acceptance is going to be either. So the market, on the other hand, is pricing in a very quick recovery in Q1. It's priced for perfection. And when it's priced for perfection, that means that anything that can go wrong probably will go wrong. Right now, stocks are trading at a PE of 40. That's super, super rich. A normal PE for the S&P 500 would be somewhere in the 16 to 17 range. We're double that. So yes, what do I see happening? First of all, valuations are such that any whiff of bad news could spark profit taking. Brexit, they're back at the table again. Time is ticking away. They've only got a week to figure something out. A hard exit for England could disrupt currency markets. It certainly would disrupt commerce in Europe, especially for England. I don't see that as a huge threat to the market. As soon as we come back from New Year's, though, we do have a Senate runoff in Georgia. The market wants a Republican victory because that would preserve the Trump tax cuts. Will Republicans win? Who knows? So that is a possible snag for the market. Valuations are definitely an issue. So there are two ways that this can be resolved because profits have to catch up with current stock prices. And it's going to take longer than one quarter for them to do that. So there are two scenarios. One scenario is that we just kind of tread water, float around like we are right now. The other one is that the market pulls back. Well, when you get a pullback like this, you usually get a rally, then you'll get a retest, and then you get a rally off of that. All of this takes time. And that's really what the market needs right now. It needs time to grow into current valuations. With interest rates at 0%, there aren't many attractive alternatives because bond yields aren't keeping pace with inflation. So you've got corporations issuing cheap debt, using the proceeds to buy back shares. That's also good for the market. Any dip is going to be an opportunity for us to reestablish bullish put spreads and then to get kind of back into the swing of things. However, at this juncture, right here, with option premiums being so cheap and with stocks being at their highs, any little market correction like this, like this, like this, just this little move right here would spell disaster if we're layering a bunch of bullish put spreads out there. So our best strategy right now is to stay in cash, wait for a pullback, and then to reestablish some bullish put spreads. on really strong stocks. Incidentally, I'm going to set up a model account. It's going to be funded with $10,000, and I'm going to allocate $1,000 per trade. That's the margin that I'll have up, so the number of contracts will vary depending on the difference between the strike prices and the credit that we receive. But I'll be using that as a model under the assumption that we don't have more than 10 positions on at any one time, simply so that you can get a feel for how the weekly swing trading video has performed. My gosh, I wish I had done it this year because we flat out knocked the cover off of the ball. It's a fantastic year. So next year, I'll start doing that, and then I'll post on a monthly basis. I'll post my brokerage account statement so that we can see how we're doing month over month. Let's keep our powder dry. Let's try and get to the sidelines with that Amazon trade. I'm going to do a search tonight that's new, and I'm going to show you how you can find some excellent swing trading opportunities. I'm going to take you through a few other charts, show you some swing trades that I like, but I'm not posting anything new to the staged order entry screen because I don't want to be repairing trades that are going bad because of a market pullback. I want to be focused on that pullback, looking for new opportunities. And if that pullback happens during the week, I'll send you a recording. It could be a Tuesday, it could be a Thursday, it doesn't matter. If I see an opportunity and we don't have any positions on, we're going to nail it. So rest assured, when the coast is clear and when there are trading opportunities for us, you know I'm going to post videos. So let's take a look at what we've got working here. And let me talk about the Intel trade because we did leg out of that. I'm going to put this screen back up here because your instructions on Intel were such. I had mentioned to you Monday morning, about 2 hours before the market opened, and actually I warned you Sunday evening, we are going to be buying Intel back. We're going to be buying that spread back, but I need to see how the stock is going to open Monday morning, and I need to get an indication of where the market is going to open. Well, thank God that I waited because I had a very clear vision Monday morning of what we needed to do. What we were going to be doing on that spread was we were going to be buying in that $49 put, market on open. So that order was working before the opening bell, and the opening price, which everyone's entitled to if your option order was out there before the open, you were entitled to a $3.05 fill. That was the opening price for that option series. Once we bought that put back, you were instructed to sell the December 31st 48.50 put for the same price that we paid for the $49 put. So in this case, you would have had an order to sell the 48.50 puts for $3.05. Since we were able to buy and sell the options for $3.05, we actually got to keep the dime credit that we put on initially. So that was our profit, was a dime on the trade. The Intel December 31st 48.50 puts traded as high as $3.35 Monday morning. So I know that you were able to get filled at $3.05. So we legged out of the position. The reason that I was able to do that was because I was very, very certain that the stock was in trouble, and I knew that we were going to have a market tailwind because the S&P futures were indicated 60 points lower. When you're legging out of spreads, it's critically, critically important that you have both components. And in this market, you don't want to be short for any amount of time because we've been floating higher. So let's take a look at Intel. I'm going to have to scroll back a few days. We'll go into that 5-minute chart. Actually, let's stick with the daily for just a second. This was news last Friday that Microsoft was going to start producing its own chips. And Microsoft has been a huge customer of Intel's for decades. That was long-term devastating news for Intel, and it comes on the heels of Apple announcing similar. So this is a material change to the company. That's why we saw a dramatic sell-off in a stock that usually doesn't move very much. And we always are leaning on these support levels. There's the 100-day moving average that we were leaning on. Once that 100-day moving average is violated, first of all, when we use that as a support level for our bullish put spreads, normally these price points are going to attract buyers. When they don't, and when there's material news not like this, and you see a long candle like that through that support level, that is your warning sign that you've got to take action. Now, on the swing trading videos that I do and on the trades that we have in the staged orders, I do not send exit instructions during market hours. And I won't do that to you because many of you work and you can't react during the course of a trading day. Plus, I typically only look at where the stock closes. So I'm looking at it 5 minutes before the close if I'm going to adjust my swing trades. That way the stock can move around during the course of the day and I don't get head faked out of a position. But in this particular case, I knew we were in trouble, and that's why I addressed it Sunday night. And I'd mentioned to you, we're going to be getting out of this trade Monday morning. We know that the stock is relatively weak, so we've got that tailwind. We know it's weak. Now we also had the market setting up bearish opening, 60-point drop on the S&P 500. So we had both elements working in our favor. Now, if you tried to leg out of this and you tried to buy back your short put and the market rallied, then you've got a lot of risk exposure. That's not what happened though. There's the gap down. We bought our Intel puts here, probably able to sell the 48.50 somewhere in here, and you can see how the stock continued to move lower. Well, we were fairly confident that there was enough selling pressure on the stock to where we would get this price action, but the risk that we could not afford to take would be to have the market up 30 or 40 S&P points. That would be disastrous for legging out of a spread like this because the stock would probably gap down, we'd buy back our short put, and then the stock would follow the market and go zoop, and we would have our head handed to us on that 48.50 put. I know I make this look easy. It is not easy. And I've got a couple of videos on the website that show you how to leg out of spreads intraday and the way to do it. You've got to make sure that you have both components in place. And on Intel, when it broke that 100-day moving average on material news that's going to change the company's outlook for a very long period of time, then you know that it's okay to take a bearish stance and to flip-flop on it, but you have to wait for that market tailwind. You've got to wait for an opportunity where both the stock and the market are aligned. Then you can leg out of these spreads. Incidentally, I'm going to be recording a video on credit spreads versus debit spreads. And I'm not sure if I'm going to be doing it Thursday or maybe I'll even do it on Christmas Day, and I'll release it and I'll show you the difference between the two and why I prefer to sell credit spreads. So look for that video and let's get on with some trades. Let's take a look at some trade ideas. I did want to mention how we got out of that Intel trade. So please, when you're legging out of spreads, I've been doing this for 30 years. It's not easy, and you can take a small problem and you can make it into a monstrous problem by improperly legging out of these. So be very, very careful. For most of you, once that support level is breached on the stock, you should just close the spread down. Just buy the whole thing back in, wipe the slate clean, start fresh, look at your next trade. In this instance, everything was lined up, so we were able to execute perfectly, quite honestly, because if we had waited any longer, we may not have been able to get that price on the 48.50 put. Great. Well, anyway, let's get to some trades. Let's take a look at some stocks. I'm just going to go through my heavy buying search because I like it. And we'll take a look at the stocks that are in there. I'll tell you which ones I like. Some of these will set up well for trades on Christmas Eve. It's a half a day trading session. Everything closes early. Expect quiet trading. If you're hell bent to put on some spreads, then you can consider some of the ones that I'll show you. Otherwise, you should really try and avoid trading. This is a low probability trading environment. So NVAX, I don't see anything here that looks remotely good to me. There's just chop. Yes, you've got a support line. I want to see some upward momentum. JD, this is nice, downward sloping trend line here. You're through two major moving averages. Doji didn't go anywhere today. Chinese company, Chinese stocks have been a little weak because of possible delisting. You've got the 100-day moving average here. So I like this breakout here. It's been kind of choppy, not a lot of momentum. I could find better. FCEL, FCEL, downward sloping trend line here. Nice bullish flag pattern, great breakout, beautiful follow through horizontal resistance. Stock getting a little overheated, big volume. Day trade it for sure. We had a lot of people day trading this in the chat room today, making really good money on FCEL. Looks strong, looks like it wants to keep going higher. You can see how it finished close to the high of the day. Even with the S&P 500 pulling back late in the day, market down, down, down. Stock holding its own, holding the bid very nicely. What does that tell us? That tells us that if this were all fluff, profit takers would have been in there smacking that stock down with the market. But they didn't, because there were buyers willing to gobble up shares. That's a strong bid. This stock wants to go higher. I certainly will be watching it tomorrow. FCEL. Good for selling out of the money bullish put spreads? I don't know. There are a lot of hot stocks right now, most of them in the electric car space that I've got to question some of the valuations that I see out there. So I think fairly risky, just like KNDI was pretty risky trade for us, but we got rewarded nicely for it. Here is a nice setup. You got a downward sloping trend line here, bullish flag formation. This is target. You can see how it started to break out above this downward sloping trend line. Had a really good day today. Had a big spike right up in here. I suspect that holiday sales are good. That was probably the news. And the stock closed right at that big spike higher. You can see the volume there. Yes, I think Target sits up pretty well for a bullish put spread. I would try and key off that 168 level. You can see the 50-day moving average coming into play around 168. I don't know what kind of premium you're going to get for that. That's about 6-7 points out of the money. Whoops, we could take a look. Probably have to go out to January 15th or so. And we're going to be looking at that $68 strike or anything close to it, 168. So if we go 167.50, 165, I need to get 50 cents for that. And you can see that spread is 47 cents bid, offered at 60 cents. Yeah, you could probably get that spread done. You're going to be in that trade for about 4 weeks. So beware as far as that's concerned. But overall, I do like the price action of the stock. So yes, TGT. I like that one. Selling the 167.50s, buying the 165s, expiration January 15th. Dish, no thanks. Big drop, little bounce. FEYE, big breakout. This train has left the station. Yes, possible for some day trades. Got a lot of momentum, big volume. Now, got to get through resistance. Nothing there for us. GM, yeah, I kind of like this downward sloping trend line and the big green candle here with a breakout through that downward sloping trend line. Bounce off the 50-day moving average. I'd like to see a little bit more stability in here for a few more days because I want to make sure that this is not a bearish flag setting up. Draw the line underneath here and then zoom right back down. That would be bearish. So you've got to make sure on these setups that you've got a few more candles to make sure that, yes, the trend is higher, especially if the market is moving higher. So if the market is moving higher, you really want to see these stocks take off. And if I put up the 1 OSI indicator, you're going to see some relative weakness. See, it's still weak relative to the market. We want to see this poke above that zero line, then we can have more confidence selling an out of the money bullish put spread keying off of that $40 level. Right now, and for those of you that don't know, there would be your flagpole for the bearish flag. Okay, there's the pole. You would get a little bit of a rally, a little bit of a bounce, and then you'd get another leg down, and that's your bear flag set up with a breakdown below this upward sloping trend line. So you've got to make sure that that's not in store for the stock right now. So GM, interesting, but I'd have to wait on it. And if I see a chart like that, and I have a price point picked out that I think would confirm that this stock is moving higher, I would click GTC and I would double click on that. Now I have an alert line here that spans over to the $44 price level. If the stock is able to get above that $44 price level, yes, now I can feel pretty confident about getting long because it's been able to follow through. Use those alert lines. SRNE, we day traded it today, had a nice little trade on it. A couple bounces in here, nothing too special. It's got to get above that 100-day moving average. That's going to be resistance. JKS, downward sloping trend line, broken to the upside. Yeah, it could get going. Solar stocks are also a little bit overheated. No, I don't see anything here for us, quite honestly. There's another bullish flag formation, downward sloping trend line. You've got the stock, nice long green candle, trying to get through that moving average right there. That's the 20-day moving average. Kind of choppy in here, kind of choppy here. Don't really see much that I like there as far as selling it out of the money bullish put spread. I want a little bit more consistent price action. You can see it's just starting to regain its relative strength in here. Worth watching. Got test one, test two, two lines of support there. Nothing there. GME, GameStop, downward sloping trend line, big breakout, follow through, good volume, relative strength now. I think this is one that you can keep an eye on. A little bit far out of the money as far as support levels, so don't really see a bullish put spread there. Just going to click through here. Really nice strength. Really good day trading prospect right there. Not much in the way of selling a bullish put spread. I think this is Pure Storage, so this is a tech company. Maybe something down here around the $21 level if you can get a decent premium for it right when it took off in here. Take a very quick look at that. It's got good relative strength, only has January options. So if we were going to go down to the $20 strike, you can see we're not going to get any kind of decent premium for that. We'd have to go to the 2250s. So 2250, 20, there you're looking at a 25-cent credit off screen. We need to get 50 for that. Option premiums are tiny right now. Really hard to find a nice looking trade. PINS been compressing. I wouldn't trade that breakout. You can see how we have a bearish hammer here, evening star, even if the stock opens lower tomorrow. No, I don't see anything there for us. CLDR, nice big breakout, 1-day move, follow through. Let's see. It's a good breakout in here. Maybe. Just need a little bit more information on it. So let me show you a search. I'm going to go into custom search and then we'll wrap it up for tonight. I'm going to show you some new searches that I've added. They are based on the Heiken Ashi plot. And if I put that up, it is the last plot right here that you would click on, and it changes the nature of the candles. Now, I did a video on this earlier in the week. Please go to the tutorial section of the website. I have a complete video there under Option Stalker features so you can learn more about how this plotting method works. In essence, it blends, it smooths, it makes it much easier to stay with the trend. It's also very useful in helping us identify the strength of a trend. So what I'm going to do is I'm going to go in and show you a few new searches that we have. When you have a flat bottom like this and a long green candle, that is very bullish and it shows that the strength of the trend is intact. So this is very, very nice. And you can see in here all these flat bottom candles. That tells you that that is a strong move. If we go into the first setup here, which is what I'm going to use, this one is actually looking for reversals. So what we'll be looking for here is a pattern where we have, and let me click on the first one and I'll be able to show it to you, where we have a red candle with a flat top, indicating that there is a trend in place and that it's a downward trend. Then we're looking for a doji that usually comes before we have a reversal. And then the final bar would be a flat bottom green candle. This is a reversal, and what you would be looking for as a swing trader is you want to make sure that you have your nice strong trend intact. Then there's a period of profit taking and a little bit of weakness, but the stock does not pull back dramatically. It stays pretty close to that high. That is a bullish flag formation. And so when you get this after a nice run like this, then you can feel pretty confident in that entry point. So AGNC, yes, looks pretty nice. We're going to click to the next one. But this is a REIT, and they pay a very high dividend, so it does not move much, and it's not going to be a good candidate for selling out of the money bullish put spreads. GM, we already took a look at, but let's take a look at it using this plotting method. You can see the trend strength. There's your pullback. There's your downward sloping trend line. Flat bottom or flat top red, doji, flat bottom green. There's your reversal. So as I mentioned, I'd like to see a little bit more to this before I get on board with GM. It's got to prove to me that it wants to go. Nice strong trend here, a little bit of a pullback. Looks like the stock is ready to go. That's GPMT. So this will be a nice search for you to be able to use. There you go. Nice trend. Actually a compression here. Now the stock's trying to break out. Yes, this could be an excellent candidate for selling it out of the money bullish put spread. Not much here. This is very choppy. So even though you see the pattern here, this is all chop. This is pretty nice. I like this because you've got really nice flagpole, meaning that this stock really ran hard. Lots of flat bottom green candles the whole way up. A little bit of profit taking in here. Stock takes a little bit of a breather. Got your flat top red, doji, flat bottom green, big volume, relative strength. Aha! Now we're talking. And this support, 1, 2, 3, 4, 5, all along this $9 level, actually $9.60, tells me that yes, this stock is ready to move higher. So let's take a look at the options here. And we'll put in that symbol, VFF. And we'll go to the January 15th expiration. That's all they've got. And here we can see that there are put options available on it. And that would be one standard deviation is the blue line, two standard deviations is the red line. You can take a look at that $10 strike price. $10 almost puts us below that support level right there. If we want to go to the $9 price point, that actually gives us a little bit more safety. So let's do some quick calculations and see if this is a decent trade for you to consider. If you do your research, you take a look at the company, you like what they do, you know who they are, and you'd be willing to buy the stock, then this would be a decent put right because there's a lot of premium in these options. So for a $9 strike price, you have to put up 20% of the strike price. So in this case, you'd be putting up $1.80. $1.80, and in this instance, we should be able to bring in 40 cents pretty dang easily. 30-cent bid offered at 60 cents. So let's say that we can do this for a 40-cent credit. In the course of 3 weeks, in the course of 3 weeks, that would represent somewhere in the neighborhood of close to a 25% return. That is pretty dang good. And so we would not be buying the stock at $9. We would be buying it at $8.60 because we get to apply the 40-cent credit That reduces our cost, our purchase cost. And if I take a look, $8.40 brings me all the way down here. So I've got lots of cushion to be wrong on this trade. But given the price pattern, I think this stock continues to go higher. Let's do something else. Let's go back to a regular chart so we can see what's going on. And that's how the HA, Heiken Ashi plots help us. See all the noise in here? Up and down, choppy back and forth. You can see we've got a lot better clarity now. Not as much noise. You can see the trends much easier. So I like this trade. I think this is a decent trade, but you've got to be willing to buy the stock. If you're assigned on the stock at $9, you turn right around and you sell the $9 calls on it. Let's zoom out very quickly and see what the stock has done on a longer term basis. And there you can see this is actually quite a nice breakout. Downward sloping trend line back here around the 550 level. Earnings there, off to the races. So obviously they liked the earnings announcement. So that's the final search that I'm going to do. We could take a look at VSAT. Let's do that. We had one more on the search, so we'll do that. And actually, I want to show you one other thing very quickly, and nothing there for us. The other search that you can use, and you'll have to toy around with these. Again, I explain each one of these patterns in detail in the video on the website in the tutorial section. But we're going to go with HA continuation 2. Now what this is looking for, if I'm clicking bullish on a daily basis, it's going to look for 2 consecutive flat bottom green candles. And I'll go through a couple of these and then you'll be able to see. Look at that. That's what you want to get. Look at how strong that trend is. I'm just going to click through these charts and you'll be able to see how powerful this search is. Nice stuff, huh? These are all, that's a nice breakout right there. Hadn't seen that one earlier. Symbol CDAY. Compression, nice breakout, decent volume, good relative strength. I like to look for good option liquidity, stock above prior day's high, heavy volume today, daily, HA continuation, bullish. Those are your search results. You can run that right now, flip some charts, get used to it. I have methods that I'm going to be using to improve all of these. So I'm experimenting with it a little bit right now. Super good, super powerful, but it can be better. And I'm always looking for ways to improve, excuse me, to improve what we already have. That's all I've got for you this week. No new trades. Let the market do what it's going to do. I feel that we've got a chance for a market pullback in the course of the next 2 or 3 weeks. That pullback is going to present us with an excellent opportunity to get some trades off. But with where we stand right now, I feel that there's just too much risk and we've got to go too close to the money to get the credit that we want. So with that in mind, please have a safe, healthy, happy holiday, and we will see you next week. Thank you. Good night.
Thank you for watching this YouTube video. I'm Pete Stolzers and I'm going to keep the trade ideas coming along with lots of education, so make sure to subscribe to the channel and please turn on your notifications so that you never miss another trade. If you like the content, please give it a thumbs up. I've loaded 2 other videos that I think you're really going to enjoy. Stay tuned. We'll see you soon.